We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to show off a tool that allows you to highlight quality markup in a stock pattern. Now I refer to markup more so than markdown is because markup is like a fishing rod. You see get any fishing rod, and a fishing rod goes up in a nice arc, but when it crashes down the line it's pretty much vertical straight down. So the best way I find to invest is to go long and take advantage of a nice gentle low vol markup. Now I don't do a lot of shorts, so I only focus on Wyckoff accumulation and markups most of my time. So I like to have a tool which monitors quality markups and also those crazy markups that last 1, 2, 3, 4, 5 years. You know what I'm talking about. I'm talking about Amazon, Microsoft, and the FANGs in general. But I'm just going to show off this tool, how you can use readtheticker.com to highlight quality better than most markups. Now, in the sense, if you can name a quality markup on a chart with a bit of colour and a few lines, that means also you can highlight the area of correction or the area of accumulation or not. Now what I'm trying to say that if you go mark the nice little acceleration on the stock price, the opposite is, well, that must be accumulation or breakdown. So here we have a weekly chart of Apple. I'll just scream up a bit. So this is Apple weekly. I've got I don't know, about 5 years in there, and I've got my regular RTT steps in there. It's a custom indicator, and for example, this is a cause. That's your effect. You have to understand something about Wyckoff. We talk about cause and effect. That's a consolidation in the advance, cause and the effect. Oh, hang on, come on. Yeah, cause and effect. So causes are a period where you want to be the contrarian and start thinking about accumulation, watching for trend changes, checking your fundamentals, blah blah blah. And obviously the markup. Now the problem with markups, you're going to get the best traders in the world. They're going to get into a trade, they're going to enjoy maybe a 20, 30, 40% run up, but the thing goes up 150% markup and they get out too quick. That's very true in Amazon, very true in Apple. I mean, I thought Apple was done here, but look, it just took off. Now the ideal thing to have is a tool which says, hold on, you're in a quality markup situation, believe your tools. Okay, I'm just going to scroll down here in weekly chart. This is a 5-year thing. Now here is the tool, not that fancy. You get to go okay, so what we have here is a regular RSI weekly. Now the RSI, this is a different RSI than what you're most used to. This is an RSI with a measure of 300 weeks, because I'm interested in long-term moves. I'm interested in catching moves that last 6 weeks to 52 weeks. So I'm not into day trading or 30-day trading. I like to get the stuff that moves big. So what we have here is the RSI with a moving average of 100 within the RSI. So this line where my cursor is, that's a 100-week moving average. But the whole RSI on itself is based on 300 weeks. With an average of 3, and I randomly just stuck on a 3 standard deviation. Well, it's 3. No, it's about a 3. I think it's 3%. Oh no, it's 3. Yeah, 3 RSI points on the band. So that there's the 300 RSI. That's the 100 moving average. I think it's a simple moving average, and the 3 is 3S RSI points. Okay, and here I've got it ranging on that. So here I can see, if I just scroll up a bit. Boom, that's as you can see there, I've got a pretty good mathematical tool. Now mathematical tools are the problem. I mean, a lot of people, I don't get too excited about mathematical tools, because Richard Wyckoff actually did actually argue that you're not going to make any money just using mathematical tools on their own. But I use these tools to complement Wyckoff phase determination. So it's just it's not the priority tool. I use the Wyckoff logic as you should. I throw in a bit of GAN and a few cycles to see what's going on, what I can learn from it. So using mathematical tools that allows you to highlight in colour your fundamental understanding of what's going on in a price chart relative to Wyckoff, it just adds value. And also when you're looking at, say, 30, 40, 50 charts, you go, oh, that looks good. And when you're having to make a decision to get out, so it just helps. Anyway, as you can see here, the blue is where the markup is good quality, and the red is saying, oh, markup has changed. It's either an accumulation or it's breaking down in distribution. Okay, breaking down to, mark down. So like I said, I like to follow the markup. So you can see there, quality market. Now a lot of people would be getting out about there in Apple. All right, they got a bit nervous. So you got a big sell down. So everything I say is hold on, and that's when the sell off came down about here. Okay, now there's a big consolidation pattern here. If you want to get in down here, you have to use your own interpretation of the Wyckoff logic, volume changes, and any other research you can come into. And over here's we had a bit of a terminal shakeout there, and oops, wrong bloody button. Whoop, that's the one. And obviously, I like to see price above the dotted red line or moving above it. That just goes to me showing it price is standing in the upper band of the RTT steps, which RTT steps are designed to show cause and effect. And I like to throw in with that my regular RTT trend status. I have a set at half month with weekly, and this allows, as you can see here, where is it? That's a sell. That's a buy. That's on the half month. If you want to do weekly, that's a sell on the weekly. I'm talking the sell when these directional plus and minus bars. It's plus for up and minus for down, and that's an early signal there. Oops, sorry, that's a buy there and a buy there and a sell there. So one's more volatile than the upper, but it just gives you an idea how the chart is working. So if you want to go sell there, probably a false one there, but another second go there. So if you're going to stagger in, this indicator is quite good, so you might stagger in there. Stagger in there. Like I said, this is a mathematical calculation. They should not override your Wyckoff thinking, but it's just another way of using colours and charts and representation to say maybe things are changing in the pattern there. So as you can sort of see there, if you're going to hold on to a 20-30% withdrawal, so drawdown, you can accumulate there. So it's just another tool to show them, but definitely a tool that shows Wyckoff markup is another version of the RSI with averages and bands, and I found that completely very, very useful. You can set it to obviously with our indicators. If you're looking at a daily chart, you can look at an RSI weekly on the same chart, so it's all very, very good. So that's what you see there. Now I'm just going to scroll down to this is a 5-year version. I mean, I think it's about a 5-year. Is it 2000? No, it's a bit longer. 2008 year. I'm just going to scroll down to an all-time chart. This one here is going from 1992 to 2020, so it's a history chart. So here's my markup representation. As you can see, it's pretty good. Here's Apple, right? Oh, sorry, that's a bit hard. I'll go down to my log. There's Apple log chart, and as you can see here, I'll just highlight the markup. So I've got bang, bang, bang. A couple of falsies, but you've got to be aware of that. Nothing's always perfect. I'm just trying to say is the red zone in this RSI indicator. To say, right, let's have a look at my accumulation. Does it prove to be accumulation, or is it more serious and a mark down in distribution? So red is the high risk when you want something to go long. Blue is, my God, it's going well. It's been marked up correctly. Should I add to my position? So I, buy, stagger in much higher, for example. And you can see here's markup, markup, markup. I think that one there. Markup, markup, markup. So they're all looking pretty good. That's a pretty good strike rate over what was that, 28 years. So if you remember readtheticker.com, set up your RSI with a 300-week RSI, 100-week a moving average, and a 3-point RSI band. Okay, just have a bit of a perusal and see if you agree. It shows off your markups and your stocks. Now, I think I will just do one other stock, for example. Say, what's a volatile stock? Oh, gold stocks are always crazy. XAU, eh? Caps. Now, gold stocks compared to, say, the FANG stocks, I are a small size, therefore they're easily can contained by the big boys for accumulation, because there's not a lot of shares in the gold stocks, and to accumulate a large position, they've got to do more manipulation on them compared to the wider market. I mean, a $500 million several $billion position in gold stocks is a lot harder to achieve than it is in, for example, in Apple. So you have to do a little more manoeuvring to do that. So therefore it's more volatile. So let's have a look down here. Let's go to history. So there you go. There's the markup there. That's not too bad, is it? So V reversal there. Markup gets really good about there. Boom, boom. Markup from about there to there. And as you can see, the markup started there, but kind of ran out of gas because we never got to the upper band, but then it's rip-roared up here. So I just scroll down. Good markup there. Big V reversal. Markup's good there. Markup started to warm up. Like I said, gold stocks are more volatile and they're there to tease you. You had a pause, which wasn't that damaging. Should have been a great call to load up, and now the markup came up there. So I use my indicators, giving ideas. You can see this pullback here was nothing like what we had over here or I had over here, and you can see the accumulation in this area here. So that was definitely accumulation in there, and so it does. So that's looking at a well-controlled stock like Apple, and also looking at a more volatile type animal like the XAU, which is the I think it's the Philadelphia Index, gold and silver stocks. Anyway, thanks for watching. Check it out. It's worth a look.